Surge and follow through. 3 of the 4 indices at new highs. Low volume bars at our highs. The S&P is broken out to new highs after spending more than a month gyrating in a consolidation pattern and several months without directional movement. Seasonality now turning very negative over the next couple weeks. A breakout of the consolidation range that failed, then that failure failed. So we're back into positive price action for the S&P. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:10 a.m. Central Time, and I'm recording this in preparation for the market day of February the 17th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing and trading decisions that you make. So let's dive right in and see what happened in the overnight. Now remember, we've got a 3-day weekend with a trading holiday yesterday. The futures market were actually open for half a day yesterday, so some action there, but obviously very, very low participation and low volume. As for actually last night, Monday night, we have kind of a mixed bag. We'll basically call the broad index futures markets scratch. They're all kind of moving right around the Friday close at this time. When I say that, this probably net change is probably reflected from yesterday, since the futures market was open yesterday. Crude oil down about 0.46%, and gold similar, about 0.5% as well. The one that's up is the euro, is a little bit stronger today. Coming in today up about 0.3. In terms of the overseas markets, and most of them had normal exchange action yesterday. China up 0.76%, Hong Kong up 0.24%. The FTSE in the United Kingdom up 0.22%, and then Japan and Germany both down. Germany down was the weakest at down 0.33. In terms of macroeconomic reports, relatively quiet coming into today. And indeed, I think, yes, this one little yellow report down here. We do have Empire State Manufacturing, an orange level report that will occur before the market opens. So nothing terribly exciting about the macroeconomic reports on the slate for today. In terms of current volatility, obviously we've been coming down quite a bit. The short-term VIX is now 11.76, and you see the historical implied IVs, all down here in the bottom quarter, with 36% on the Dow. In terms of standard deviation moves, we continue to be perhaps normal now, with about 1 standard deviation or greater moves per the last 5 weeks. That's really quite normal. So after a couple weeks of pretty significant activity, our action really is in kind of normal range action and perhaps low volatility kind of action close to close. So things have definitely calmed down on that front. Let's take a look at our daily report. And in terms of our intermediate term phase opinion, we're looking for higher highs and higher lows. We're still in phase 3. Our portfolio investor posture, and I've changed this up a little bit. This 2 different opinions here. The first one, the IBD status, is confirmed uptrend. The GMI index has 5 out of 6 with a bullish stance with a buy signal that was registered since January 23rd. In terms of trader posture, our active trader market posture is very bullish at this point. Position sizing opinions, Investor position sizing opinion up to 100%. Active trader based on volatility also up to 100%. So really quite normal across all these measures today. Market timing with the low volume, what some people might call amateur activity, here the new highs and so forth. It really is a neutral stance at this point in terms of probabilities of being able to power much higher. We need to see some energy momentum. Generally, of course, bullish markets do not have the same kind of strong energy as down markets do, but still we'd like to see a little bit more participation by the institutions around these new all-time highs to be able to have much more confidence about initiating new bullish positions. Also, if you take a look at where this move started, we've basically rocketed straight up from the false breakout to the bottom side to what looked like initially a false breakout to the upside, a little bit of a pullback, and then power on up to a confirmed breakout. So we've come a very long way without any kind of significant pullback, and so odds are starting to get a little dry in terms of initiating new positions. So kind of keep that in mind. Our market timing opinion for 1 day and 3 day is neutral. Market posture, all 4 indices are very bullish. You see the ratings are all up over 80 on all 4 indices. So this is very strong. Our hedge warning status has dropped to a simple 0, normal status. And you see from the volatility based metrics, really quite normal across almost all those metrics. The one thing that's kind of standing out, our distribution days, still a very high count here with 6 on the S&P, 5 on the NASDAQ. Also, with Friday's action, we did get a volatility ratio warning spike. So this is kind of an exhaustion type of pattern where you get extreme to one side or the other. In this case, we have spiked down to where the ratio is now saying that we could reverse on the VIX. And obviously, if we reverse on the VIX at this point, that means that we probably have bearish action coming back into the market where people are more fearful. So just a couple warning signs here. Bottom line, though, we're still in a threshold level 0 hedge warning status, and really quite strong for bullish action. All of our risk aversion indicators are risk on. No worries there. A couple new things here. In addition to the option income strategy opinion, where we recognize that the VIX is back inside the acceptable window for the initiation of new option income strategies, you do have a situation with an opinion on covered calls now. And that's calling for slightly bullish with an equal distribution between in the money and out of the money strikes being the opinion. On put selling, again, slightly bullish, so acceptable to sell puts against the core basket, core portfolio basket of stocks that you are willing to own. So if you get an opportunity in one of those, certainly put selling in this current environment would be very well called for. We do on our point and figure charts have a number of new signals here. So notice new levels with commodities, consumer discretionary, utilities, and then also our bond ratio. So members might want to dive into that chart a little bit more. That's available today. In terms of relative rotation ratio, notice that while the ones that are strongest here, XBI, the biotech, and you see this one over here, very much up into this upper corner where we like it to be. So certainly that's a focus area. The semiconductor index is also a focus area. Now the next two, IYR, XLU. IYR may have just actually triggered a new re-entry signal, Depending on your setups, you might want to take a look at that. That is, of course, the real estate ETF. And then number 4 here, utilities. You notice that while in a relative intermediate term setup is very strong, it has really quite strongly rolled over. So might want to be keeping an eye on whether that either gives you a re-entry opportunity, or at the very least any current positions are being protected, their profits protected, and risk minimized. XLU certainly has been a significant change in energy and momentum in recent weeks. From our market posture, very strong across the board, with utilities, as we just discussed, being the outlier. Energy has been significantly improving, and we now have neutral up and up, of course, across the 3 time frames. So very strong signals there. We're also, I should say, for a long time there, about 3 months, we had kind of flat lines where these were flipping back and forth with every up and down day. But we have now started to see some separation and angle coming into these indicators, so our posture is starting to be much more meaningful, and indeed right now all the postures are looking very, very good. As a percent change, energy actually had a very good day on Friday, up 1.95%. Also material, so look at this, high beta doing well for the most part, with the exception of financials had some weakness, and low beta like consumer staples and utilities really not doing very well. So we continue to see this theme of risk on coming across and sector rotation coming across from where we spent so much of last year. Top industry groups: retail, railroads, transportation, internet, healthcare are our top 5 industry groups in the current shadow trader chart. So that is enough for today, I think, but pretty good looking market at this point. As always, when things start to get maybe extended, you start to look for signs of exhaustion or capitulation to the top side and maybe a pullback. That we would have something of a pullback at some point this week would not be a bit surprising. But in the more intermediate term, it would seem that the bulls are in control, and unless there's a significant pullback and that takes us back into the range and basically labels the prior couple trading days as a false breakout, our expectation is that we have a resumption of the intermediate term bull market. As always, liking us on YouTube and your other favorite social media platforms where you can follow us, always greatly appreciated. And you may send questions or comments to support@falconglobaltraders.com, and indeed more information is available at the website, same basic address. Disclaimers as always: hit the pause button if you need more time. And as always, we do appreciate each and every one of you in the Falcon Global Trading community. Good trading and goodbye.